I want to bring in the man who's been warning us about Europe's Alice in Wonderland print and spend policies, which I think the left wants to use here. Mark Grant's with us. All right, Mark, you've written extensively about this stuff. I say the Democrats want to bring this mammoth printing and spending policy to America. Am I on the right track?
Yeah, Stuart, I think you are on the right track. As you know, where do we print money in the United States? We print money at the Fed, so this gets even more complicated. But what Europe has done, the European Union has done, they now have a balance sheet of $5.3 trillion versus the Fed's balance sheet of about $3.7 trillion. Our balance sheet at the Fed represents 18% of the GDP of the United States. The ECB's balance sheet represents over 40% of the balance sheet of the entire European Union. The ECB has no freedom, no independence. They do exactly what the governments of the European Union tell them to do.
And if we elected a progressive to the presidency of the United States, that person, whomsoever it is, would lay on heavy pressure to just print and print and print and pay for Medicare for all and the Green New Deal. That's what could happen in America. But answer this for me. If you just print and print and print the way Europe is, what's the end game? What happens?
Everybody wants to know that. I'll tell you what happens, though. Eventually, your currency gets demolished as you print money out of nothing but keystrokes. Bear in mind that the Fed was created by Congress in 1913. And the Fed has several times Congress has several times changed the mandate of the Fed, and they could change it again to tell them they have to print more money and then to give the money to Congress to spend on all these social programs. But it would be a disaster for our economy and, in my opinion, even a worse disaster for the dollar, our American currency.
Can you deal with this real fast? Because what I see happening this morning in our market is interest rates are absolutely tumbling. I've got the yield on the 5-year at 1.31%, the 30-year 1.91%. That sets the fear of God into a lot of investors. Should they be nervous when you got it tumbling as fast as that?
No, Stuart, I don't think they should be nervous. What's going on is something, if you understand it, that there's a great rationale. Over 50% of the bonds in Europe right now, including sovereign debt and corporate debt, are yielding less than zero. So what we're seeing is this steady flow of money out of Europe, buying the only stable place left practically with positive yields. But I'll tell you when everybody should get nervous, and they should get nervous if all of a sudden we start heading towards negative interest rates, because the outcome of that will be a disaster for the country, in my opinion.
It causes a lot of anxiety when you see this kind of thing happen, this wild volatility. But whilst we've got you, Mark, I know that you are in Fort Lauderdale, and you've been there all weekend, and I think you're staying. Can you look out your window and tell us what you see at the moment, what impact Dorian's having on you?
I will tell you, Stuart, Fort Lauderdale and Miami were incredibly lucky. We skated. All we've had since Dorian has gone to the north of us is some wind, a few squalls, a little rain, and nothing. And I thank God that we got by this.
Did you take your dogs for a walk on the beach?
I took my dogs out in the backyard. We weren't heading to the beach and this stuff, no.
Okay.
I have 3 Aussie rescues, so we're all out there.
Oh. You're a good man. Great to see you again, Mark, and I trust you'll be back soon.
You too, Stuart.
Thank you, Mark Grant.
Absolutely,
everyone.
anytime. Thank you, sir.